Sunday, October 26th. Welcome back to Weekly Finance Digest. I'm your host, Lucky Lillygreen, and this week we have a lot to cover, so let's dive in. Beginning with the U.S. stock market, the week started off strong with the NASDAQ, Dow, and S&P 500 up due to strong corporate earnings from companies like 3M and Coca-Cola. Though, fears over U.S.-China tensions and missed earnings from larger companies like Netflix resulted in some volatility this week, particularly among tech stocks. While this short-term news is important to pay attention to, let me remind everyone that 3 years ago, Netflix was trading around $200 per share in May. Now the stock sits at north of $1,000 per share. Therefore, the dip in this market needs to take into account the strong performance of the company over the long term. Overall, there were a lot of corporate earnings this week. Auto, RareEarth, defense, and aerospace stocks performed well, supporting the market. And we have some interesting things happening with the data centers and AI spending, as evident by the $10 billion Google and Anthropic deal announced on Thursday. The 2-year Treasury yield fell to its lowest point since August of 2022, and the 10-year yield dropped below 4% for the first time in over a year, signaling investor confidence in future rate cuts by the Federal Reserve. Additionally, while gold, diamonds, and crown jewels may have been stolen from the Louvre on Sunday in the heist of the decade, the U.S. stock market saw an interesting run with gold as well. On Tuesday, gold prices fell the most in a single day since 2013, declining by over 6% and losing close to $300 per ounce. Silver had an even larger drop of around 9%. Gold, an asset commonly held to support diversification in one's portfolio and stability during times of economic hardship, has had a huge run in recent years. Silver has also reached its highest price per ounce in more than 4 decades. Precious metals have encountered unprecedented highs, and gold is outpacing the US dollar as the new trustworthy asset. The dollar has been depreciating significantly this year, reflecting the debasement trade, an idea that trust in the dollar is no longer what it once was. Additionally, gold stays independent from the government's influence as well. Bloomberg says, quote, "This is no longer something investors automatically say about the US dollar or the central bank," end quote. Many central banks around the world have been adding to their gold reserves when G7 countries froze the assets of Russia in 2022, causing many to diversify against the US dollar, China being one of them. Instead, they are holding more gold. China is the biggest consumer and producer of gold in the world. Overall, this trend can be reflected in the fact that the dollar used to make up 72.4% of the foreign exchange reserves in 2000. But now is at 56%. The dollar is still the world's reserve currency, but not by much. Trade concerns, geopolitical tensions, and Trump's tariff policies have called into question the US dollar as the world currency reserve. What other alternatives do we have? Is the question many countries are asking. We are entering our 4th week of the US government shutdown, making it the 2nd longest shutdown in the country's history. Since October 1st, Democrats and Republicans have been battling over legislative spending. Democrats are fighting to make Obamacare, a tax break for 24 million Americans to buy insurance, permanent, which is set to expire at the end of the year. Republicans want to pass their version of the spending bill, in which they are short 60 votes. Another highlight in Washington impacting the market is Trump's focus on rare earths. China has been the dominant player for this critical industry for the past few decades, but has heightened control over exports this month. These materials are vital for infrastructure and the use of AI, smartphones, cars, and even fighter jets. According to the Financial Times, quote, "Shares of US-listed companies MP Materials, USA Rare Earths, and Australia's Lynas has more than doubled this year, as Trump has ratcheted up support for the industry that has struggled to compete with low-cost producers in China," end quote. On Monday, President Trump met with Australian Prime Minister Anthony Albanese and signed a $1 billion rare earths agreement supporting the build-out of mining and processing projects in hopes to take away some of China's leverage, as well as set a minimum price floor for the materials. And lastly, rising US-China tensions will be on the front of our minds in the coming week as Trump's meeting with China's president will occur in South Korea on October 30th. Moving on to market movers of the week, let's start with Amazon's Web Services outage on Monday. Surprisingly, this event did not affect the stock as much as it is currently trading at around $220 per share. CrowdStrike, ticker CRWD, encountered a similar crash in 2024, which brought their stock down 20%. Why that did not happen for Amazon is perhaps due to the fact that many are becoming more accustomed to outages, or since Crowd focuses on cybersecurity and the outage related to its core business product, the safety scare affected the stock more. The true movers, though, include GE Aerospace, ticker GE, which beat profit and revenue estimates. The company's revenue was up 26%. Additionally, the company has raised its guidance and is well positioned to capitalize on industry tailwinds. RTX, another defense stock, was up around 14% after quarter 3 earnings. 3M, ticker MMM, a company very close to home with headquarters in St. Paul, Minnesota, where I am from, hit a 4-year high. Seems like the new CEO, William Brown, brought in last year, has paid off. General Motors, ticker GM, was up 15% this week over raised guidance. And Crown Holdings, ticker CCK, a global packaging company, was up about 8% as the company beat earnings estimates. Intuitive Surgical, ticker ISRG, leads the innovation of robotic-assisted surgery and minimally invasive care. The company currently trades at around $550 per share and was up 26% following strong Q3 earnings. Danaher, ticker DHR, surged on Tuesday over strong quarterly results. And Chubb, ticker CB, an insurance company, reported record earnings, contributing to a 5% gain in the stock price this week. Moderna, ticker mRNA, was up 7.1% on Monday, but fell later in the week due to a failed trial for its CMV vaccine for birth defects. Netflix, ticker NFLX, was down over missed Q3 earnings. Looking ahead to the last week of October, things to watch out for include next week's Federal Open Market Committee meeting, scheduled for October 28th through 29th, and it should be an interesting one. The Fed is independent from the U.S. government, so the shutdown will not prevent a meeting. But the shutdown has impacted the release of key economic data that the Fed relies on to make economic decisions, such as the Bureau of Labor Statistics and the Bureau of Economic Analysis, which are halted during the shutdown. Furthermore, the gold standard is missing. The Fed uses this gold standard government data to make decisions about monetary policy. The federal fund interest rate hovers around 4.11% to date, with a possible cut expected in the near term. Tune in next week for our special on auto companies and rare earth materials.